cash flow gets a lot of love, right? Like a lot of people come into this for the cash flow thing. It seems to be the value prop that most people sell and the value prop that most people are attracted to. But talking about home price appreciation, we found out through our journey doing the show is really massive, Paul. And I wonder kind of like what your journey has been on appreciating home price appreciation.
Yeah, it's very interesting. We talked a little bit about this, and when I saw what you guys wanted to do for this show, I was like, yeah, absolutely, please. I love this show, particularly. Number one, because it has affected me personally a lot, it's affected my father personally a lot. Those of you who were at Ignite last year and saw me, even we talked about today, the presentation I did that I think is really important that a lot of people need to hear is the power of that profit center, right? Appreciation and growth. And, everyone focuses on current income and it's sexy and it's a topic and everyone likes to focus on it. And you're right. That's kind of what the industry standard was for a long time in focusing on cash flow, focusing on my current return to evaluate the deal. Is this a good deal or not? And I was there when I was first starting out, year 1, year 2, year 3, year 4 in my career, decade plus ago. That's what I focused on. And even on our show that we've done on this show, right? We've talked about that in previous shows a lot too, is, hey, don't make the same mistake I did in my investing, right? And what's cool is I've been able to see in my arc and my growth, and as I mature as an investor, and as my dad matures as an investor, and he's actually retiring this year simply because, and I want to be clear, he's retiring this year simply because he's made strategic investments, like with Greg, that have appreciated over time. And that's where the overwhelming majority of the return for my portfolio, my father's portfolio, has been in the growth, has been in the appreciation. But what's cool is, and what I love about today, and why I'm personally really giddy to be kind of a fly on the wall for this call, is no one really unpacks that. No one really in our industry takes the time to educate on, well, how does home price appreciation actually happen, right? And it's this kind of mysterious 500-foot level, very amorphous, well, the economy grows and houses go out. It's like no one takes the time and breaks down. Everyone breaks down cash flow. Everyone breaks down cash flow, right? We can sit here and break down cash flow and how things work because it's small numbers and it's very incremental and we can really nail it down. And it's an easy concept to grasp. The ability to grasp why and how a market will grow in value over time it's a hard thing to understand, but when you do and it clicks, it's like a big light bulb goes on. And it's really, really fascinating, but it's super impactful in a portfolio, right? And that's why I'm excited for today's call, to have Greg peel back some of those layers of that onion, kind of pull back the curtain and say, this is actually what happens. This is what's going to happen in Jacksonville particularly, but also here's how you can take advantage of it, which is the really cool part, right? And that's how it kind of comes full circle. So that's why I'm really, really excited and why I appreciation, Mr. Bob.
I appreciate that take. Greg, in your famously short words, how does home price appreciation happen?
The Fortune Builders audience may not know how.
They don't know that you take a 1 minute thing and turn it into 7 minutes.
I am guilty of that. Probably will happen again. But, there's so many misconceptions about how you actually build a successful rental property portfolio. And so I truly try to show and shed light on how you actually do this. But beyond the numbers, which I'll show you in just a second, just think about this. Like if we're taking a big pie and we're thinking, okay, how am I going to create the biggest pie? And you've got those 5 different profit centers. You would think that you would want to spend the most time analyzing and basing your decision on the biggest component of that pie, right? If 60, 80% of your overall wealth pie is going to be generated by one of those profit centers, you probably want to spend all that time there, or 60 to 80% of your time at least, right? But what many people do is they spend the vast majority of their time, 80, 90, 99% of their time focusing on the thing that's going to drive the smallest amount of wealth after a full market cycle. And so that's why I'm so passionate about unlocking why I appreciate appreciation, why you should appreciate appreciation, and why you should factor this in. This should be a big part of how you make your decision to invest in real estate. And it's not just because home values went up over the last few years because of COVID. The data that we'll go through and we can talk through is spanning 4 decades of time, because what you really I was going to say really gain an appreciation for. I'll limit that for a little bit now. What you really start to realize is that you can count on home price appreciation if you're in the game long enough. Many people believe I can't count on it. I don't know when it's going to happen and whatnot, but that's not what the data shows. That's not what the experience is. And I get to manage $1.3 billion of real estate assets. And I have done that for 18 years. And I have all this data that I get to look at all the time. And if you keep coming back to the show, we get to show this data over and over again. And so all of this data says that home price appreciation is predictable over a given period of time, over a long period of time. And if you know that, then that's actually what's going to drive the majority of your return on investment when we're sitting here in 10 years and looking back at your portfolio. That's how it's going to land, just like it's landing for you, Paul, and that's how it's landing for your dad, and that's how it lands for so many JWB clients.
Got it. So do you want to?
With all that being said, I don't think I talked at all about how home price appreciation actually happens.
I was like, remember when I asked that question?
Well, so there we go. All right, let's talk a little bit about home price appreciation, how it happens, right? So home prices appreciate based on supply and demand. And the supply side of the equation, right? How many houses are in inventory? So we have a good metric there because we understand how many listings are on the multiple listing service, right? So we understand the supply side. The demand side is largely driven by population growth. And so if you're thinking about places that are going to lend themselves to above average home price appreciation over the long haul, think of those cities and think of those states, think of those regions where people are moving to. Where are people moving to right now?
Warmer climates?
Yeah.
Tax-free climates?
If you thought of a state that started with F, which state would you think people are moving to?
Florida. A lot of people are moving to Florida.
There you go, right? I mean, it's been this way even before the COVID, in migration in the state of Florida. Jacksonville specifically is the 5th fastest MSA. That's the 5th fastest region for population growth. And that was even before COVID. Mm-hmm. So if you want to look at places where you're going to be able to see significantly higher home price appreciation, the easiest thing is to look for where people are moving to. Look where population has been growing consistently over a decade or more, because those dynamics where population has been growing for that long probably are there to stay. And it's probably going to lead to additional population growth over the next decade or 2 or 3, which will lead to higher home price appreciation.
Yeah.